Hi everyone, this is Jadid from Property Framework, and today I want to talk about how a beginner should think about building a property portfolio. Now, this could be something that could be overwhelming for a beginner investor because a portfolio comprises of several properties giving you a good cash flow, your asset value is in your millions, and you would have to go through the process of buying properties. It's a long and overwhelming process. So, as a beginner investor, this sounds really frightening, and you might feel that you it's not something that you could do, or it's not something for you, and it's only for certain people who can do it. But let me tell you that if you apply the correct steps, if you know where to focus, and if you correctly stick to a plan, then it's definitely possible as a beginner investor for you to build out a portfolio. So today I just want to break this down into a few steps, and you can use these as pointers, which will point you in the right direction to build out a portfolio. So the first one is really why. Before anything, you need to know, why am I investing and what is my goal? Like, what do I want to achieve in about 15 years? Do I want to get to a certain asset value? Do I want to generate passive income so that I can plan for my retirement? Or do I want to just buy a few properties and then sell them off and then use that equity to for my lifestyle? So whatever it is, there has to be that clear goal in mind. So only when you have that clear goal, you could reverse engineer and then find out what you need to do now. You need to find out how many properties you need to buy, what their growth rates are, what their cash flow profiles are. Only if you have that end goal in mind, you would be able to select these properties accordingly. So that is the first step, knowing your why. The other thing that I find is that most investors think that just because they are tight on borrowing capacity right now, let's say you go and speak to a mortgage broker and find that you can only buy two properties now, that doesn't mean that you're just going to be left with two properties forever, because things change. Lending restrictions change. Lending criteria might become easier in the next couple of years. Your salaries will increase. Government policies might change. Therefore, over time, your borrowing capacity will improve and you will be in a position to buy more properties. But it's important for you to initially have that conversation with the mortgage broker and understand, at this time, how many properties can I buy with my borrowing capacity. The second person you need to talk to is an accountant. Now, an accountant might help you get into different trust different structures. So essentially, if your mortgage broker tells you that you can only buy two properties at this point of time, and you want to go on and buy a few properties, then speak to an accountant and see if you can, instead of buying these properties under your own name, whether you can build out your portfolio by buying under different structures. And it's important that you're speaking to these professionals right at the very start, because only then will you be able to plan and map out your portfolio. For example, after buying a few properties and you max out your borrowing capacity, if you go and speak to an accountant about going into different structures, he might not be able to help you because you've already maxed out your borrowing capacity. So the planning stage is where you need to have these conversations with your mortgage broker and also with your accountant, because this is where everything has to happen. Okay, so the first thing is planning and knowing your goals and speaking to the right people, especially mortgage broker and accountant. The second thing is knowing your numbers. So are you ready to invest? You should know how much you need as a deposit, how much is the stamp duty, how much would be the buyer's agent fee if you're going to use one, how much would be the legal costs, and therefore know how much you need as an upfront cost to purchase that property. The other thing that you should know is, what is your cash flow? The cash flow is total rental income minus all your expenses. So on an annual basis, how does your cash flow look like? And are you able to sustain that cash flow with your current income? Those are the kind of questions that you need to be asking yourself. Okay. Once you have sorted that out, you also need to make sure that you have the necessary buffers in place. For example, at least 3 months worth of of expenses, including mortgage repayments and all the other expenses. You need to have a buffer in place for at least 3 months for all these expenses. Only then would you be able to manage when something goes wrong, because things can change, unexpected events can happen, and therefore you'll need to have certain buffers in place. And so make sure that you have these buffers in place as in the form of savings before you get onto that investment journey. Okay, now you know why and you have that plan. You know the cash flow that you need and your upfront costs that you need, and now you're get ready to get into the property market. So by this time you would know at what price point you need to buy, what yields you need to get, what growth you need to have, and therefore you need to select the right market. So the right market is one that's having really strong growth, because you need to accumulate properties fast so that you can reach a certain portfolio value. To have really strong growth, it's important to target the correct location at the correct time. Now, what most people miss is not getting the timing correct. They select the correct location, but they might enter at the wrong time. So location and timing is important. So how do you select the correct location and the correct time? By looking all around Australia, looking at the demand supply profiles of each area, and then selecting the best area to invest where demand outstrips supply based on your own requirements and based on the growth potential of that area. Okay. Now, when you're getting into the market, you need to get into the very first stage is buying foundational assets, right? So you could target the correct market, but what you're going to buy is assets which have really good capital growth and good cash flow. You can't ignore your cash flow. Your foundational assets, that is the base, would typically be in areas with diversified economies, where there are a lot of industries supporting that economy. So it could be typically a capital city, or it could be one of those big regional centers. So this is your base. You need to buy properties in these locations, and over time you can capitalize the growth that you get from these properties. So the first stage is buying these base properties in the correct locations. The second stage is about consolidation. So now that you have the base, okay, now you're looking to consolidate. You can refinance your loan to get on a better interest rate that reduces your expenses. You can do cosmetic renovation on your properties and improve the rents. That improves your cash flow. You can put granny flats on your properties, for example, to improve your overall cash flow. You can make additional repayments and bring your loan down. So this is kind of the optimization stage where you're looking to really improve cash flow and bring down your debt. And the last stage is where you move away from high capital growth, high cash flow, and you're essentially focusing on high cash flow. This is where you buy blocks of units where you get very high cash flow, or even commercial properties. But that is right at the end stage where you need heavy cash flow to support yourself, right? So one of the most important things when you're buying properties is also selecting the right location, selecting the timing, but you also have to have a strategy in place on top of that plan. So what do I mean by strategy? So strategy is essentially finding if are you going to buy in a capital city market, or are you going to buy into a regional market? Which one is going to give me the best outcome for my goals and my requirements? Am I going to use a buy and hold strategy? For example, am I just going to buy it, do nothing with this property, and then just sit on it and get the benefits of capital growth? Or am I going to have a slightly more active strategy where I buy a property and then I do some cosmetic renovation and then I get equity uplift through that? I also have the chance to buy something under market value. Am I going to follow this path? Am I going to buy older properties where I do have the chance to do a cosmetic renovation, or am I going to buy newer properties where it'll be low maintenance and I also get some amount of depreciation? Which one would be best suit me? So this is essentially your strategy and the tactics that you are using to build out that portfolio. So this is also something that you need to factor in when you're building out that portfolio. And the last thing, and I think I touched on this earlier, is having the right team. You have to have the correct professionals who are advising you at each stage of the journey. An investment savvy mortgage broker who can tell you how many properties you can buy and how you can get from one property to another. An accountant who can give you advise you on how to minimize tax, and more importantly on what structures you need to buy so that you can repeatedly keep on buying more properties. And an investment focused buyer's agent, if you decide to go down the path of a buyer's agent, and a person who is investment focused, who can buy the correct properties at the correct time in the correct locations to meet your requirements and your goals. So these are just some high level tips that you need to consider when you're beginning to build out your portfolio. Now, that's a lot of things that you need to go to, but you can break it down into steps and you can really get forward if you follow these tips. If you want to know more about this, then feel free to contact me and we can talk about this in more detail. I hope you found this overview useful.